Hello everyone, welcome back to my channel. So this video marks the wrap up of week number 10 of our road to 200k challenge. We have a few things to talk about, especially because as you saw in the previous video at the start of this week, I placed in a lot of puts. I sold a lot of puts, and I set those puts in a little bit more aggressive way. I mean, based on the prices at which the stocks that I want to get rid of, specifically American Airlines, Ford and Lyft, were at based on where those prices were, I decided to place my puts a little bit closer to what I've been doing in previous weeks, because it was my intention to buy more shares of these stocks so that I can lower the average cost of acquisition. And then I may be able to start selling calls at a lower strike price so that I can more easily get rid of them. And so this was a strategy that I followed at the start of this week. And I have to say that this almost came into fruition, and in a very, very strange way, because what happened was that as soon as I placed those puts and we wrapped up the day, I made a video on this that marked the start of this week. Immediately after this, on Tuesday at the start of just shortly after the markets opened, most of the puts that I sold on these shares went in the money, and so basically I was in a position to buy more American Airlines shares, also more Ford shares, and also more Lyft shares. SLOD, also I had sold some puts. These ended up being assigned, as you can see right here by the blue dot here next to the name, but we'll get to that in a moment. And basically this was a pattern over for most of the week. These puts went into the money, meaning the price of the stock went below the strike price, and the markets went down, I would say on average, by and large, especially because of what's going on currently in the Middle East, the conflict that goes on, and apparently the situation now is escalating, fortunately, and there's a possibility that also the United States might also get involved in this. And so this looming shadow weighed upon the US markets over the last few days, and as a result of that, stocks went down for most of Tuesday, Wednesday, and also a little bit on Thursday as well. However, as the week progressed and those puts remained largely in the money, there was also a lot of expectation regarding the upcoming, which ended up being yesterday, Friday, the upcoming jobs report on the United States, in which it would be disclosed the amount of jobs that the US economy has created in September. And so there was a lot of expectation for that report. And the markets reacted very positively because that job report came actually pretty strong. Basically, the jobs created exceeded by more than 50% the expected value by investors. And so this is like everything that goes on in terms of expectations by investors. This ended up being very good news. Markets reacted positively, as you can see also right here. The markets finished the day positively, and also the shares, most of the shares that I currently own, finished in the green, closed in the green. But this also has the flip side that usually investors do not like, which is if the US economy is producing that many more jobs as expected, then perhaps there is lesser of even no incentive for the Federal Reserve to continue to cut rates. And so as the economy seems to be holding up well, and so the perspective of recession may be averted, and so there is less incentive for the Fed to cut rates further. And so there is always the two sides of the coin, and because as you can imagine, if the report came under expectations from the investors, of course that would mean that probably the US economy is doing worse than expected, but investors probably would get a little bit more excited by the prospect that in the coming Fed meeting, the Federal Reserve would have to cut rates further. So there's always two sides of the coin, but I believe that this is a very good proof that the US economy is going well. And so, yeah, investors reacted accordingly. But when it comes to our shares, markets reacted positively, and by doing so, simply the puts went out of the money again, and so. But this was just as a reaction from the initial opening, from the opening of the US market. But then, over the course of the day, and this was nail biting, the puts that I sold on 4, which would strike, was 10.50, as you can see right here. And also the lift puts that I sold for a strike of 12.50. These particular puts went in and out of the money, back and forth for most of the day. And so I was very, very under the expectation, all right, what is it going to happen? Will these puts be assigned or not? But as you can see right here, but let me tell you right away, I would be fine either way, because I would like to buy the shares at that price, because then I would be able to sell some calls on the shares, try to get rid of them. So I would be happy either way, but it was also it was the uncertainty associated with it that made everything more nail biting that I was expecting, and so. Yeah, basically this is it. American Airlines, actually, because I sold puts with a strike price of 11, immediately on the next day after I sold the puts, meaning on Tuesday, they went into the money, and they went into the money by a pretty large distance. The puts had a strike of 11, but the stock just began trading at 10.50, 10.60, 10.40, something like that. But then, because of the job reports yesterday, they jumped basically, and they blew through the strike price and stayed out of the money for the remainder of the section. And so, because of that, the puts that I sold on American Airlines expired worthless. And of course, I was not able to buy more shares of it, but. Ironically, and this is something that you cannot control, Mr. Market, the only puts that I was less willing or I desired less to be assigned, which was the Estée Lauder puts, these eventually were assigned, and so I was forced to buy 200 more shares of Estée Lauder at the price of 97, simply because when I placed these puts at 97, the price was hovering around 99, 100. And since Tuesday, the stock came down to about 95, 96. Eventually, it stayed for a while between the price of 97 and 98, which would be right in the middle of our short strangle. But it couldn't hold up. It went below 97. And even though the jobs report came out positive, that was not enough. That was not enough for the stock to recover, and so it stayed at this particular price, and which is 95.82, and I had to buy them for 97. But yeah, it is what it is. We'll be able nonetheless to sell calls on it for the upcoming week. I must say that I was not expecting these puts to be assigned at all when I sold them, and now looking back, perhaps this was a slight mistake, because by selling a put with a strike price of 97, and we have to consider that my average price is 98, probably this was a mistake, because if these shares, if these puts were assigned as they ended up being, this does basically nothing to lower our average price. And so because of that, I have more money tied up in SOD shares without having any specific impact on the price at which I will be able to sell the entire holding, while avoiding any capital gain. So even though I bought these additional stocks on 97, I still have to try to sell them at 98, because any value lower than this, I will lose money on the trade. So this was probably a mistake, but yeah, we learned with our mistakes, so that's not really an issue. Nonetheless, the rest of the options fell away, worthless, and so nothing else has happened. These were pretty much very, very close to the strike price of the puts that I sold, but they ended up on the other side and out of the money, and so they expired worthless. And so we'll have to try again next week to see if we can buy some more shares of these in order to try to get rid of them later on. And this is a very, very big priority for us, because earnings season is coming, and it would be very, very good if we could get rid of them before the earnings are announced, because usually when earnings come, stocks tend to have a lot of volatility. Most of the times it comes down by a lot, and so if we can avoid that, that would be very, very good. So far, as you can see, Lyft and Ford Motor Company have no announcements already in their agenda. Let's see if American Airlines has. No, apparently no. And I think so they also do not have. Let's see. Actually, it is at the end of this month. This gives us some margin for us to try to get rid of the stock, but time is on the absence, and I would love to get rid of this as soon as possible, because I really want to avoid having the stock by the October 31st. And as we can see right here, this is let's see, so this will be on a Thursday, so this would be nice to have out of the way by then. But yeah, this is it, and let's see how things develop over the next week. For sure, I will be selling this call right here. I would probably receive this or probably something along the lines of this particular premium, which is quite nice, and so we'll have to wait and see what happens. But for the time being, let's just update our scorecard and basically fill out the rest of the trades and see how was our performance. So these were still the trades of September 30th. This were the trades that we placed at the start of the week. And so, as you can see right here, I bought back the calls that I had sold on Lyft the previous week. And why is that? Because as time went on, it became very, very, very unlikely that the Lyft stock would reach the price of 14.50 by maturity, and so the calls became almost worthless at 1 cent. So I decided to buy them back and basically roll over the trade and sell the same put, but with a week more away from maturity, and so in order to receive more premium. And that is why we still have this put right here. This is the put on Lyft that will expire next week, and so we'll also have to input this trade. But for the time being, let's just close out this particular trade. So we bought back this Lyft puts. Let's just see what was the date. I believe the date was October the 1st, and indeed it was. We bought back at 1 cent, and we had fees of 1.53. So this is the Lyft trade. We basically closed the trade, and we bought back at 1 cent, and we basically did it. let's see here. Let's just copy here. It's easier to keep the format as it is. And so this was on October the 1st. All right. And so this is it. And as you can see here, yeah, it was not that much of a return, but still, yeah, reasonable. And so basically what we did, we rolled over the trade. And then let's just put this in here. Let's copy this here below. On the same day here, I believe we sold this on the same day. Yeah, and this is it basically. Yeah, we sold the same puts, but 1 week for 1 week after, and at 13 cents of premium, and with fees of 279 and 70 cents. So this is actually 349 in fees. In fees, yes. So this is it. So 349, and we received 13 cents. All right. Let's just copy this one right here because this is a covered call, right? Never mind the error. It's because the formula is different from what is usually used for cash covered puts, so never mind on that. This will expire on the 11th, and so this is it. Also, as you can see, and I can already show you that these Estée Lauder shares were assigned, so we had to buy at the price of 97. I had to buy 200 shares. All right, so let's put this right here as well. As you can see here, this expired and the shares were assigned, right? So nothing to pay here in fees and commissions. However, and again, let's do the same thing that we usually did before. We're going to do we're going to input a sort of a loss, which is a mark-to-market loss. This loss will be just temporary. We will eventually recoup the money. So as you can see here, the difference from 95.82 to $97 is $1.18. So let's just input in here as the difference that we had to pay. It's like a cost for us, all right? So as you can see, this loss of 155.41 is a loss that we had to bear because we bought at 97 something that was a 95.82, but it's not really an issue. We'll be able to sell these shares eventually at the price of 98 or lower if I happen to lower the average price of the entire holding, but so far the average price is 97.75, so I'll still have to sell at 98 in order to at least not lose money. All right, so this is it. I'm going to make an additional calculation in here, but that will come for a later time. I don't want to bother you with that at this moment. Then, as you can see by our trade statement, everything else fell away. All the remaining puts and calls, this call and so they also expired worthless. All of these expired worthless. So the lift puts expired worthless, as you can see right here. So let's just close in the trades of lift, these lift puts, right? So nothing happened. They simply expired worthless, right? And so expired and expired. Yeah. And as you can see, yeah, these were much better returns, obviously so, because this took place over a shorter period of time. And then coming back here, the 4 and the US Bancorp puts also expire worthless. As I said, the 4 puts were almost assigned. They were at the point in which they were in the money. The price hovered around $10.40, which would have meant that we would have to buy. But the jobs report yesterday basically avoided that outcome, and as you can see, this was quite good return. That also tells us how close the strike price was from the stock price on Monday, because that allows us to receive a very large premium given the price of the stock, and so that's why we have this huge return. There is always a trade-off. There is always a trade-off when you set the strike price on options. The closer you set the strike price to the stock price, of course, the more premium you get, and if everything goes right, you will be able to capture a much larger return. But of course, that comes at the expense of a higher likelihood of having to buy or sell the stocks, depending you are trading puts or calls. So there is always a flip side. All right, so it's actually very interesting, because there is never one alternative that is better than the other in any single situation. There are always trade-offs to make, which makes it the entire science and the whole thing of trading options much interesting, or very interesting. These American Airlines puts, as I mentioned, also expired worthless, as you can see, and so let's just input this in here. So these expired also worthless. And another good return, as you can see here on annualized terms. So, and now of course, since the price at the end of the week of SLOD was 95.82, of course this covered call, or these calls on SLOD also expired worthless, because the strike price was 98. So this gives us also some good return on absolute terms, but of course, given the fact that this trade took place over 10 days, the return is low. But yeah, that's because of the time it took, not because of the return, because the return was pretty normal by itself, as a 0.31. But yeah, basically I believe this is it. Let's just see if there is anything else here. So we already input the puts, we assign these shares, and the rest that was there simply fell away. And as you can see here, this the view of our portfolio accurately matches this. Let's just, for the sake of record keeping, let's just copy this in here. Right, let's put this in here, because we had to buy 200 shares. All right, so we bought 200 shares here, and now let's look at here at, for example, this one here. Yeah, we're gonna include this in here, because now we need to rearrange this formula for this particular trade. So this was what the price we had to pay times the number of contracts times 100, which is fair, the premium we received, and times the number of contracts minus the number the fees and commissions, and so the rest falls away. We have to basically do this, right? And we have to also keep this denominator to make sure how much would we have to sell this stock or this particular 200 shares to make sure that we are able to break even. And yeah, basically these 200 shares need to be sold at a price of 96.60 to break even. All right, so not a big deal. We'll be able to still do that eventually. All right, so nothing to be afraid of. And yeah, basically this is it. As you can see here, because we also put in here this particular we also have in here the price we will have to receive back in order to sell to break even on the shares we bought 96 from SLOD, and somewhere above here, yeah, and this is here as well, we will also have to sell these 300 shares of SLOD at the price of 95.42, and we bought them at 100 in order to break even. That tells me that we already received quite a lot of premiums from these particular shares, from the calls of these particular shares, but it's not really an issue. We will be able to eventually recover this, because the stock is not that far from the strike we need, which is a 98, and given the fact that it's a very good stock, it has a lot of value, and even today, this week, I'm going to make a little bit of publicity here, but Morningstar released, basically, send an email. I am a subscriber of the Morningstar website, and one of the articles said that 30 was the title, 30 stocks to buy right now, and at number one was Estée Lauder, because they give them basically a very good prospect. And you can see right here, I can show you in terms of the fundamentals, Morningstar assigns them a 5-star rating, which means that it's a very good stock to have right now. It has an economic moat which is wide, meaning it has a competitive lasting advantage relative to its competition. In terms of the moat trend, the moat is or this competitive advantage is expected to remain stable in the future. It assigns almost double the fair value estimate, which is, I would not pay that much attention to it, because I think that's all borderline outrageous. How can you assign such a high fair value estimate given the price is currently at this one? But of course, it's their own analysis, and I respect that. There must be some truth in it, but it's so far out, I would not pay that much attention to it. And the uncertainty is the lowest possible, which is medium. So usually can be high or very high, but in this case is medium, which is even better, because the uncertainty regarding the estimate is lower than usually is. So this is a very good stock to have. I don't mind keeping it, but I would like to get rid of it for the time being, just because all the buying power that I can get, so that I can sell sell more puts in order to buy more shares of these, to get rid of them as soon as possible, it would be positive. And also given the fact that we have an earnings announcement coming up for SLOD, I would like to get rid of that in order to avoid the volatility that comes with it, with such an announcement. You can see already right here that even though an historic volatility of 39%, the implied volatility reflected in the premiums is already reflecting a volatility of 52%. So that means that investors are already pricing in the premiums of the options a higher volatility than there usually is, and this is especially because this SLOD is going to announce its earnings, so it's expected that the price will be more volatile than usual, can either go up or go down. I would say usually it goes down more often than not, but yeah, we never know, and we'll have to see what happens. But for the time being, this is it. For sure, I will be selling this call right here next week, and then we will see what happens. I will also, if possible, try to sell some puts on some calls on these stocks, American Airlines and Ford. But for sure, it's not going to be possible unless the prices rise significantly more, because otherwise I would not be able to sell calls without being committed to have a capital loss if they are assigned. But yeah, this is something that we'll have to see next Monday. For the time being, this is it. Feel free to leave your comments below and your suggestions if you have any questions about the currently state of the trading. feel free to reach out. Also, you can connect with me on LinkedIn and send me a private message if you need. And yeah, the whatever else is the usual. Feel free to like the video and subscribe to the channel. And yeah, I'll see you all next Monday. In the meantime, have a great weekend.